The Bank of Canada increased its policy interest rate by 50 basis points this week. In this video, I'm going to break down for you exactly what that means and why this jump is so significant. Welcome back to the channel, everybody. Thank you for tuning in. It's Rob Marsiglio here from Keller Williams. I'm a realtor out in Durham Region, just trying to bring you content every single week that I think is valuable. Usually it's stats related, but this week I think the big news is this policy interest rate hike from the Bank of Canada. So let's get right into that article. Bank of Canada increases policy interest rate by 50 basis points, continues quantitative tightening. So this is the press release for media relations right from the Bank of Canada that was released on October 26th. So the Bank of Canada increased its target for the overnight rate to 3.75%. So that's that 50 basis points we're talking about. Surprising to some thought it would be 75 basis points. What did the Bank of Canada actually say about inflation and this decision, though? Inflation around the world remains high and broadly based. And this reflects the strength of the global recovery from the pandemic, a series of global supply disruptions, and elevated commodity prices, particularly for energy, which have been pushed up by Russia's attack on Ukraine. The strength of the US dollar is adding to inflationary pressures in many countries. And that strength of the USD is something we've talked about a couple times. The importance of being strong with rate hikes in Canada is keeping our currency as close to the value of the US dollar as possible so that we're not importing inflation when we're trading with our neighbors down south. In Canada, the economy continues to operate in excess demand and labor markets remain tight. The demand for goods and services is still running ahead of the economy's ability to supply them, putting upward pressure on domestic inflation. They did note, however, that the effects of recent policy interest rate hikes by the Bank of Canada are becoming evident in interest-sensitive areas of the economy. Housing activity has retreated sharply, and spending by households and businesses is softening. And this here is an important paragraph from the press release, I think. They're noting that in the last 3 months, CPI inflation has declined from 8.1% to 6.9%, primarily due to a fall in gasoline prices. However, price pressures remain broadly based, with 2/3 of CPI components increasing more than 5% over the past year. The bank's preferred measures of core inflation are not yet showing meaningful evidence that underlying price pressures are easing. Near-term inflation expectations remain high, increasing the risk that elevated inflation becomes entrenched. They're expecting CPI inflation to move down to about 3% by the end of 2023 and then return to the 2% target by the end of 2024. Given the elevated inflation and inflation expectations, as well as ongoing demand pressures in the economy, the Governing Council expects that the policy interest rate will need to rise further. Future rates will be influenced by their assessment of how tighter monetary policy is working to slow demand, how supply challenges are resolving, and how inflation and inflation expectations are responding. So now we know the reasoning for the 50 basis point rate hike, kind of what they're looking at going forward. What did that do to mortgage rates immediately, though? It's been a while since we pulled this chart up from ratehub.ca, but we're going to look now at what is happening with 5-year variables and 5-year fixed. And what I want you to realize is that for the first time in quite some time, and we'll get back to exactly how long it's been, our 5-year variable products, at least from the big banks, even from this best market rate segment that ratehub.ca has, is higher than what 5-year fixed. From a historical context, let's look at the last time this actually happened. And for that, I want to go to superbrokers.ca, where they kind of break down mortgage rate history, the average variable versus 5-year mortgage rates over the past number of years. And we can see, let's scroll all the way down to 2022. The variable rate has been the better rate for quite some time, going back all the way to 1990 and 1989. And we remember what happened in the housing market back then. Just in case you don't, this is from the St. Louis Fed, breaking down real residential property prices in Canada. This is just an index, but it shows you exactly kind of what price trends have been like. And here is the last time variables were actually more expensive than a fixed rate product, where those rates were actually higher. So we saw the two peaks in prices in 1989, followed by a long drawn out bottom in prices before, we didn't actually end up getting back to 1989 levels until around 2004. And then from there, we kind of went on this big bull run that we've been experiencing until Q1 of this year. So there's nothing to guarantee that we're going to go through a bottom in prices that's going to last for close to 20 years. I think it's just an interesting note to bring up. The last time that we were in this position where variable rates were higher than fixed rates, we experienced kind of the biggest housing price correction in our history. The last thing I want to bring to your attention is this chart. This is a manual fancy chart that I've been keeping that just tracks the pace of sales in different market segments. So it's sales over a 30-day time period that ends on this date in this column. So you can see that kind of through October, sales pace picked up in Toronto freehold market as well as the Toronto condo market, and picked up for a bit in Durham Region, York Region, and Peel Region. Then it seems to be reverting back down to kind of where we were at the beginning of October. This is a phenomenon that I'm going to keep my eye on next time, because one thing that I noticed ahead of this pass rate announcement was that more properties were hosting kind of randomly dated offer nights, and it seemed to fall the day right before the rate announcement, trying to get buyers in prior to these rate hikes taking effect. So I want to see the next rate hike is December 7th. Let's keep our eyes on, will there be a flurry in sales activity leading up to that announcement? Will there be a flurry of offer nights or offer presentations being held the day before as well? Thank you so much for watching this video. I hope you got some value out of it. Once again, if you did, please hit the subscribe button, like the video, leave a comment down below with our predictions for what is going to happen at the next Bank of Canada rate announcement. Until we speak again, please stay safe and cheers.